Valuing a company is not an exact science. There's many different methods that you can use to value a company, but whatever method you use, you have to make sure that the valuation is reasonable. I'm about to react to a Dragon's Den episode where the founder's valuation of her company really put off the dragons. Let's have a look. And by the way, my name is Susie. I'm a finance director, a business owner, and an investor. And I love talking about all things finance and business through storytelling and pop culture. If that's the kind of thing that you also enjoy, why not subscribe to this channel so that you won't miss any future videos?
Hello, my name is Anne Hempstock. I'm here to tell you about my new product, Cream Cutie, and I'm seeking £150,000 investment for 20% of my company.
All right, so £150,000 for 20% is a valuation of the company of £750,000. A reminder that the valuation of a company is the estimated market value of that company. So how much would it cost for anyone to buy the company? The methods that are used for evaluation are quite a few, but none of them are super precise. There isn't like a scientific or very precise accounting formula that allows you to do that. They're all estimates based on a number of conditions and future projections, etc. But if done correctly, it should give us a pretty good indication of how much the company is worth.
Cream Cutie is an all-natural chocolate and orange wine-based cream liqueur. Most people have a big bottle of cream liqueur in their cupboard. They've drunk half with friends, put it in the cupboard and forgotten about it. Most importantly, we knew we had to bring it in at the retail price point of £1.99.
So far, obviously, this lady is super, super anxious and nervous, which I completely relate to. I don't know. I think I would melt if I were in this situation. If you don't have any public speaking experience, it can be incredibly daunting to talk about something that you created in front of these dragons. So I'm not bothered about her being nervous. I think I would totally understand it. I really like that she has explained why she made the product. I think that what she resolves is quite clear. It is true. I was a victim of that myself, that you buy something maybe to, for a recipe or for an occasion, you only use half of it. And then there's no other reason for me to use that thing. And so it stays in my cupboard forever. So I like that she explained how that idea came about and how she resolved it by creating smaller bottles and a lower price point that makes it an easy thing to grab on your way out when you're waiting for the cashier. And I really like that. I have to say that from what I've seen, I don't like the branding. Was there a cat on the bottle? I don't understand why there would be a logo of a cat on the bottle of a liqueur cream. But let's see how this pitch continues.
Asda gave me my first big break last month and have given me 7 stores in Scotland, with a further 31 coming online in September. Spar Scotland are also taking Cream Cutie this Christmas.
So I really like how she's demonstrating that the product already has interest in the market. She has named a few retailers that were happy to take it on board and sell it. So that's a good thing to share at this point.
I'm seeking the investment to raise the profile of Cream Cutie.
Good. So she also is explaining why she needs a dragon on board. Remember that especially in these kind of fundraising settings, raising the money is not necessarily the main thing. Of course, having money would help the business, but you can get the cash in other ways through, bank loans or other lending opportunities. But if you're seeking for an investor, you're also really carefully thinking about who you want to bring on board. The person giving you the money is as important as the money itself, because they can come in with their experience, with their profile, with their knowledge, with their business know-how, and so on and so forth. And so this lady clearly explained that she is seeking an investment in exchange for, elevating the branding, it sounds like elevating the profile of the business.
Tell me a little bit about the numbers. What sort of volume have you sold the product in so far?
I've sold about 70,000 bottles so far in 6 months. The complete cost is about a pound.
So what's your cost you a pound? What's your wholesale price?
On average, it's £1.20 a bottle. I'm only making about, on average, 20p a bottle.
Right, so that is a profit margin that is quite low. Let me see how much that is exactly. So that's a 16% gross profit margin. So remember that the gross profit, it's what's left after you deduct the cost of the product from how much you sell that product for. So she's only making 20p, which is 16% of the overall price. So there's not much left to cover the company's overheads. And also, after you deduct the company's overheads, there wouldn't be much left as a net profit to distribute to the shareholders, especially if you consider that you have to pay corporation tax on the net profits before you're able to distribute any dividends. So I'm guessing that will be an issue.
Sold 2 brands, so you've had over £500,000
Yeah.
you've had. So why are you going to share this great success with the rest of us?
So he's asking, if you think that this is going to be a massive success, then why are you giving away 20% of your company in exchange for an investment? She did mention that she's more after the profile elevation of the company rather than the money. Let's see what she says.
When I sold the first brand, I used that to pay off all my debts and to give myself some security. And the extra cash I've put into this brand. And I'm here because I want the profile that a dragon can bring to the brand.
She has used the income that she made from selling her previous brands to secure her future and pay off the debts, which fair. I mean, that's exactly what you should be doing. If you're in debt and you get a lot of money in exchange for selling your business, you should absolutely use that money to, pay all of your debts and guarantee yourself a future before you reinvest it in something else. Or at least that's what definitely I would do.
I want you to tell me why you justify your company being worth £750,000 when you make diddly squat.
Well, that's the valuation that that's the cost I would need if I had to sell it just now, because I think I've worked hard to produce the brand. I've brought it to market and I've proven it sells, and I've got it into the supermarkets and I've got it almost there.
But it doesn't make any money.
Peter is asking about the valuation. So what we were saying before is that the valuation will always be an estimate. How do you justify valuing the company at, what did we say? £750,000? Yeah. So he's saying, if the profit margin is so low, how do you justify a valuation that is that big? And she replied saying, well, I've already brought it to a stage where I just need a little bit of a push for it to be like really successful. She's already proven that people buy it. She's already proven that retailers buy it. And so she thinks that that would increase the valuation of her company.
It's not all about making money now. It might be for you, but not for me.
What?
You got told.
Well, I've never heard so much nonsense all my
You got
life.
told.
You value a business based on its ability to make money.
Yes.
So if your company is not making any money and hasn't proven the ability that it can make money, you're worth nothing.
Well, it's the investment. It's the long-term investment for a brand. Every brand has to start somewhere.
But Peter is saying, well, why do I have to pay that much money now? If it's not making any money now, if it's giving us like really, really small profits right now, why is the valuation so high? Peter doesn't want a valuation based on whatever future successes the company may or may not bring. He wants a valuation that is based on what the company is making now, which is very little.
That's the money I would look for if I wanted to sell it now.
But nobody's going to buy it.
Well, you're not going to buy it, but somebody else might buy it.
Why? You think there's idiots
Because
out there?
of the potential of the brand.
I think she might be a little bit overconfident here. I think Peter has a point in that it's true that she's demonstrated that people are buying it and retailers are reselling it, but that's not enough if the gross margin is just 16%. We don't know how much is left after the overheads are paid out and after the corporation tax is paid out. And so she's asking for £150,000. Like, how many years will it take for the investor to make back that £150,000 and then start collecting the dividends from future profits? Yeah, I think she's maybe a little bit too confident, and she came in with a valuation that is a little bit too high.
You're looking for 150,000 for 20%.
Yes.
And in 3 years' time, what do you think you'll sell the brand for?
£1 million. And maybe, well, I said that was maybe a bit enthusiastic,
Well,
but I would hope that it would be at
So it
least.
might be less than £1 million.
Well, I would hope it would be £600,000 plus.
So that
Yes.
means we'll lose £30,000.
Yeah.
Right.
Well, that's.
So she's saying that she's hoping to sell the company for less than what she's currently evaluating it for right now, which doesn't make any sense. Whatever you're valuing the company right now, you would hope that that valuation would grow as the product develops and gets sold and the business expands. You wouldn't expect to sell it for less. So how can she justify selling part of her company for £750,000 today when she just said that she was aiming to have it sold at £600,000 in the future? It doesn't make any sense.
Why I said the million, because I'm hoping.
Well, okay, let's go to the million
Right.
figure. If I invest 150,000 now for 20%,
Right.
right, and you sell it in 3 years' time for £1 million, I get
Yes.
£200,000 back.
Yes.
Do you think that's good?
That's not good. I'm going to tell you why that's not good. That means that in 3 years they will have made 50 grand of profit, because they will have paid £150,000 today, and they will get £200,000 in the future in 3 years, which is like the horizon that they're looking at, which means that every year they will only have made just over 16 grand per year, which for investors of this caliber is nothing. Why would they pay £150,000 today just to get £50,000 in 3 years? Like that's nothing for investors of this caliber, for sure.
I'm hoping it'll be more than £1 million.
But you just said it might be 600,000.
Like,
So far,
She's moving her target.
How do you get if I sell it for £1 million, you only get 200,000?
because I only own 20% of the company. You sell it for £1 million, you get 80%, 800,000. I get 20%, 200,000.
And I might sell it for 2 million. You might sell it for 3 million.
And I
It
think
doesn't sound like she understands the economics of how this works. You have to, have an evaluation of the company as a whole, and that's what you use then to value the shares that you're selling. Yeah, she's very confused. She doesn't sound like she knows what she's talking about when it comes to buying and selling, equity for a company. I'm gonna guess that nobody's gonna invest in her just for this reason. She was overconfident. Her valuation of the company was overblown, and even in the best of outcomes, this investment would not be worth them putting their money in the business because the returns are so low for investors of this scale.
even if you do sell 600,000, 50,000 bottles a month, which I don't believe you're going to get to, but even if you did, you're going to make £8,300 a month profit, gross profit.
Mm-hmm.
It's a joke.
I would be happy with that.
Well, of course you would, but I wouldn't. So I'm out.
I'm actually insulted that you've come here today and asked us at this level. I'm not here to lose money. I'm here to make money. So I'm out.
I think I'd rather hit the bottle than invest in this
Oh dear.
because I would lose my money. So I too, now I'm out.
You might achieve $1 million, but it's still not a great return. I could put my money in the bank and get interest on it and do better than that.
Yeah, right. That's a good point. So £50,000 would be a return of just over 11% every year. If you put that same money in a high interest rate account in the bank, you might get like maybe 5% of it back, which is a much safer investment than getting 11% of it back, investing in her company that makes a 16% gross margin.
I'm out.
And I think for you as an individual, I think you probably will make some money out of this. But I think with your own numbers, you've clearly demonstrated that you've overvalued the business.
Okay.
Mhm.
And for that reason, I'm out.
Right.
Well, I'll prove you all wrong. I'll be back
That
one
would
day.
be fantastic.
Fantastic. We'll
Yes.
be pleased.
I will.
Good luck.
I'm not surprised at all that none of the dragons invested in this business. Even in the founders' best case scenario, the returns would be too small to make it a worthwhile investment. And I definitely agree with the dragons that she overinflated the valuation of her company, and this really put them off. And also, can we also talk about the fact that there was a cat on the branding? It looked more like a product that I would buy at my vet's rather than something that I would like to put in my drink, but maybe that's just me. Let me know in the comments if you agree. If you like this episode, make sure that you check out all my other Dragon's Den reactions on this channel, and why not also hit subscribe. I'll see you at the next one. Bye.